Hello everyone, this is Jeevakan. In today's video, we'll look at a stock which I purchased in bulk quantities and we'll look at why I bought this stock and we'll discuss that stock from its technical and fundamental perspective and see how good that stock is. So let's get right into the video. The stock which I'm speaking about gives a dividend yield of 11% per annum and is trading at a discount of almost 40 to 45% and is trading at a PE of almost 2.5, which is pretty decent. The stock which I'm speaking about is REC. REC is Rural Electrification Corporation Limited. It provides loans to central state power utilities and also to private power developers. It comes under the Ministry of Power and we all know that the power sector will be in huge demand in the upcoming years. I bought this stock for almost 7.3 lakhs at an average of 122.3 or something like that, and I'm already sitting with a profit of almost 50,000. But that doesn't matter because I'm planning to hold this stock for many years down the line. So we'll look at that stock from its technical and fundamental perspective and see how good that stock is.
We are looking at REC charts right now. Since we are going to invest in the long term, it's of no use looking at the shorter time frames. So let's look at the longer time frames. We're looking at the monthly charts. So I'm shifting to monthly charts right now. So this is the monthly charts. So this REC is forming a multi-year triangle pattern, as you can see here. So this is the triangle pattern which has been forming for almost more than 10 years. So this is the consolidation. This has been traveling within this triangle pattern for a longer period of time. So there are two possibilities here. One, after the consolidation, there will be a huge breakout on the upside and the stock might easily double from here and go to 300 or something like that. Or the likeliness of the stock going back to the previous support line of 95 to 100 levels is more high. If it goes to that levels, I'm buying more because this is a worthy stock because of its dividend. So I'll be buying more if it goes to 95 levels. So these are the two possibilities. One possibility is that it will go to its previous support of 95, in which I'll be buying more. Another possibility is that it will go up and break its upper trend line, and again it will show retracement and then it will go up. So this is the possible case scenario in this stock. So if that happens, I'll be buying. So there are two areas in which I'll be buying. So one is here, and the second areas I'll be buying here as well. So one in the support zone at the bottom, and next is the support at the breakout area. So I bought exactly at this level, 122. So as you can see here, the stock has been trading in this channel for almost 12 years. From 2009 to 2022, it has been forming the same pattern. So what I'm saying here is that if it shows a huge breakout, the up move will also be huge. So I thought of buying at this level, but since Nifty actually looks like it has bottomed at 15,700 levels, I chose to buy some quantities at 122 itself, and then I'll be buying more if it goes to the bottom area. So this is my actual plan. So there is another pattern formation also which is forming, which is also shows that the market is quite bullish in this particular stock, which is head and shoulder pattern. This is the left shoulder, this is the head, and the right shoulder is forming right now. So there are two scenarios here. So once the right shoulder is broken on the higher side, there will be a retracement and then the upper course of its trend will continue. So let's wait for the right shoulder to break on the upside. So the easiest target would be from its head to its neckline. So from its head to its neckline, the target would be somewhere around 250 levels. So the easiest target would be 250, which is almost double the amount from what we are having right now, which is 130. So let's wait for the right shoulder to break. So the right shoulder is forming right now. So if the right shoulder is broken, the upper trend line, the triangle trend line will also be broken. So there are two confirmations for a bullish signal. Then the upper course of its trend will continue. So let's wait for the right shoulder to break on the upside. So let's look at REC from its fundamental perspective. So as you can see here, the dividend yield is 11.7% as we discussed earlier, and the stock P is 2.5, which is pretty decent for a stock like this. And the market cap is also pretty decent, which shows that it has a long way to go on the upside. And apart from that, when you compare it with its peers, only PFC has a considerable PE amount as this one. So PFC and REC both are good stocks and good dividend paying stocks. When it comes to its pros, stock is trading at 0.50 times its book value. So what is book value? So the book value here is 260 rupees. So book value says one thing, which is if that particular company decides to close, and if it decides to pay its shareholders, it will pay its shareholders in this amount. So if you buy at 130 levels, they will decide to pay its shareholders at 260 levels, which means you will get twice the amount of the purchased value in this particular stock. This shows that higher the book value, more undervalued the stock is. Stock value of this stock is 260 rupees, which is way too high, which shows that it has a long way to go. And another pros, stock is providing a good dividend yield of 11.7%, which is very decent, and it has been maintaining a healthy dividend as well. When it comes to its cons, company has low interest coverage ratio. So what is low interest coverage ratio? Which means the company might not, there is a possibility that the company might not be able to pay off its debt, but I don't see that case happening in this particular stock, since this stock has more demand in the upcoming years. So overall, this stock is pretty undervalued, and it is pretty good to hold in your portfolio if you're looking for a good dividend stock. So I have accumulated 122 levels, and I'll be accumulating more at the support as well as at the breakout levels.
So these are the main reasons I purchased this stock. So REC is giving a dividend payout of almost 4.8 rupees per share for this quarter, which is almost 29,000 rupees for my purchased quantity. So REC gives almost 11% dividend every year, which is almost twice the amount of FD returns which we will normally receive. So fixed deposit returns ranges from somewhere around 5 to 5.5% per annum. So if a stock can give you twice the amount of FD returns, and adding on to that, if it is trading at almost 50% discount, why not purchase that? So that's the main reason I purchased this stock, and I'll be holding for many years. So clearly REC is undervalued, and that's the main reason I'm buying this. So this is not a stock recommendation. I'm just sharing my thoughts on why I bought this stock. So thank you so much for watching the video. Signing off. Until next time. Cheers.